All right, what's going on, guys? How you doing, Ricky, KB, Guggin? Sorry, guys. Just looking at if the earnings came out or not yet. Doesn't look like it yet. Let's wait for a bit. But anyways, we'll go into it real quick. I want to go over the newsletter a little bit. So coming into this Monday, basically last week, the way we closed right above the 200 weekly on ES. We were basing on top of that. We were holding it. We were doing weekly closes on top of it, which is technically bullish. It's a huge support. You can't lie. The world, like everything financially, is going to shit right now. But we were holding the 200 weekly. What's up, G Money? It's not a small thing. If you guys scroll out on the 200 moving average on the weekly chart on ES, it very rarely breaks. Very rarely even tests. I think the last time it broke was probably 2008 maybe, and then before that was 2000. So those when we break that, it's usually a yearly bear market. Like it lasts longer than a year. Let me just close my Discord here. It's taking up a little bit too much. Okay, let me know if I'm lagging or anything, guys. Just tag me on the Discord, and we'll go over some stuff right now. Um, Okay, so let's start it right now. So, like I said on Sunday, we were coming into this week. I was getting bearish. Everything was signaling bearish. Bonds were crashing. Equities were weak. There was nothing good. There was earnings season coming. No one expected earnings to be good. And the thing is, we've just been basing since September. We've been in the same range on SPY as you guys see here. The top of SPY, the highest daily close was 378, let's say, and the lowest daily close was 356. So we've been in a 20 point, 22 point range on SPY for the last month. Basically, we go up, then we go down. If you guys started put swings here on October 12th, this is why I've been so patient. I put all like the majority of my money when I'm taking plays, there's different sizes to my plays. When I'm taking calls in this type of market, it's like it's my position sizing is way smaller than my puts, and basically it's not that serious. Like I'm just kind of waiting for my chance to put my money to work and put swings. What's up, Andrew? So what I'm waiting for now is my entry into put swings. And the thing is, I seen a bigger rally coming than this. I've seen, as you guys see here, we have a low here, we have a lower low on CPI when it comes to price action. If you guys go to the RSI on the daily, it's a complete opposite. We have a higher high on the RSI. Even on that CPI dump, we made a higher high on RSI. I should be a rapper. But that's called positive bullish divergence right there. We did get a pop off that CPI, a nice from 348 low all the way to 375, which is a 27 point move. 26, I don't know math right now. Huge pop off that for the bullish divergence, everything. And now it looks like we're rolling over again. So what did we need to close above today? We needed to close above this 20-day moving average. 20-day moving average is at 365.68, and we closed just below the 20-day moving average, which is a bearish signal. Why do I say it's a bearish signal? The reason being is, oh, why did I change that? So if you guys see here, ever since the rally ended back here, the rally ended back here in August, right? We rolled over underneath the 20-day moving average. You guys see here, we popped up, tested the 20-day and declined. Tested the 20-day and declined. This is where we added the IWM puts, I believe. Also the AMD puts, wrote it all the way down. And then we bounced, we hit the 20-day again, died. Bounced, hit the 20-day again. This time we did not roll over though, guys. So that's one thing. We had the bullish divergence with the RSI and the price action. Then we had the 20-day recapture on SPY, which is a new thing. It didn't happen since August, right? We're hanging on or above there. I knew they're going to make it hard, especially in a bear market. These rallies are not easy to play to the long side. I do not like them myself. That's why you guys seen Yash and them have been crushing long calls. I'm not that good in a bear market. I'll admit it myself. I'm not that interested in long calls. I'll play them here and there, small positions, but I have no conviction in them. I see bonds crashing. I see all this negative news on the news, everything. It's just not even worth it for me. I'd rather just wait and pick my spots. And those spots, I'll give you a little key on one of them in this post market. But for now, I did not want SPY to close below the 20-day moving average. We got that close below the 20-day moving average today, 365.68. Tomorrow we have to reverse and go up. If we continue below the 20-day moving average tomorrow, it's a wrap. That's the end of the bounce. We should go back and test these lows one more time. So that's my version on SPY there. QQQ is a little bit more complex. Same thing. I do have a few TQQQ calls. Right when I called them, I told you guys it was a small position. I'm not too confident in it. If we do rip, those would have paid the best. We still have a week and a day on them. So if we do magically go crazy tomorrow or something, it's OPEX. Don't count anything out. It could just as likely be an up 100-point day tomorrow as it could be down 100-point day tomorrow. That's why. And I have no idea which way they'll take it. For now, I'm leaning bearish because SPY closed under the 20-day moving average. But as you guys see here on QQQ, it's the same story. Since that rally ended in August, we've been bouncing, testing the 20-day, decline, decline, rejected, rejected, rejected. We finally got over it. We haven't had a daily close above it the last 3 days. SPY, as I showed you, we had 2 daily closes above it. Today we closed back below it, which is bearish. QQQ hasn't even closed above it. So tech is relatively weak compared to SPY. The reason being, obviously, the oil companies that are in SPY. Other than that, we need a close above this 20-day moving average, which has now moved down all the way to 271.59, guys. So remember that number this morning was, Jesus Christ, what noise was that? Right there. So 271.59 is now the 20-day moving average. We need a close above to get any type of bullish action. If we don't get that, for now, we're just bull flagging. You guys seen how bull flags end in a bear market. Back here, 3 days sideways and then collapse. Back here, 3 days sideways, collapse. Well, that's more of a bear flag. Like, bull flags and bear markets aren't usually a good thing. So we need that action tomorrow. We need a big ripper tomorrow to keep the bulls alive. I'm still favoring upside overall. I do not want to take swing puts right now. And I'll wait. I'll be disciplined. I'll trade futures day to day. I'll make money that way instead. And then I will put my big put swings on if and when I get my indicators or my levels. On is one I'm interested in. As you guys know from the weekend newsletter, today we actually tested the 20-day moving average, which is up at 63.05. We got up to 63.26, and look at the reversal. That's an ugly reversal candle. Looks like it rejected. If tomorrow is not a big green day, calls are going to go in the gutter. This is the main culprit of everything. So I told you last time I talked to you guys on post market, we pointed out this bear flag. We also pointed out in live time. Broke down. When it finally broke down, that's when stocks rolled over. So they broke the bear flag on August 22nd. Let's just go to August 22nd just for kicks. This is August 22nd. When they broke the UB bear flag, SPY was down almost $9 that day. So they rolled it down, kept coming down, coming down, coming down, coming down. Then they started bear flagging it again. Then they broke the bear flag on October 10th. Let's see what happened on October 10th. Where is October 10th? Is right here. So we had a negative almost 3-point day on SPY. So not as much, but you guys get the message here. Bonds lead, stocks follow. And as you guys see here, bonds are completely bidless. There is no buying in bonds at all. Today's low on bonds was 126.31. I have a line here. Go back on the weekly, go back on the monthly. You guys will see how long it's been since bonds have been at 126. Bonds gave back 11 years of gains. 11 years of gains at 126, guys. This is July 2011. The bond people are way smarter than equity traders. They're trying to push Powell. They're trying to force his hand now. They're trying to make him start buying back bonds. They're trying to make him do QE, and they'll succeed. I'm telling you, when the stock market starts crashing like this and goes completely bidless, they'll have no choice but to start buying stuff. That's another conspiracy for another day. Let's go into IWM. Same setup, guys. It's the same setup on all indexes like I posted. The only thing that was left on IWM is the 50 did not cross below the 100. The 50's at 180 and the 100's at 179. So we're about to get that 50 cross underneath the red line. Sorry, there's so many lines on here. 179.80. So you guys see the yellow line and the red line right there. When that yellow crosses under the red, it'll follow the same path as SPY and QQQ. For right now, it is not crossed below, so dare I say it, IWM is actually not as weak technically as QQQ and SPY. But as you guys see here, IWM has filled all the gaps. There's no, wait, there is another gap here now. 172.69. No, there's no gaps on IWM anymore. The one gap remaining is this QQ. Sorry, I'm all over the place. There's so many charts here. There's so much gaps. There's so much stuff to watch. QQQ has a gap open until 279.43. My ideal scenario is that we rip QQQ, which is tech. We rip tech up to 179.43. We close that gap, and then I'll start some puts on Apple and on semiconductor, like I said. That's ideal. That's why I took the TQQQ. I thought we would go and fill this gap. I thought we could rinse the calls and the puts after, and let's see what happens. I mean, it's not over. There's nothing too bearish about this. I know the day-to-day action is very bearish, but candles are turning bearish. But again, I don't believe we're just gonna dump right back to lows. That would make it way too easy for the people that are just holding puts and just laughing every day. You know, the bears are getting very, very greedy here. I do believe we need to squeeze some out before we make our next move lower. That's what I'm hoping for anyways. I'm not in any put swings right now, and if we do collapse, I'm gonna be very, very mad. But other than that, TNX, I'm very clear with you guys. I'm not talking my book or anything. You guys know what I'm in, know what I have. And TNX here, absolutely flying. Go to the monthly here. Let's see how far back it's been since this has been this high. These are yields. This makes it very tough for tech to rally, as a matter of fact. But again, I've explained why I think tech rallies. I want that gap closed. So 2008 was the last time yields were this high. So that's another thing to take into notice. Snapchat earnings. Oh no. Snapchat's down 20% as usual. Some people thought it would save the market. Some people, because Snapchat is huge for ads, guys. It's the first ad company reporting. So you'll see Google down. Google is down. And then you have Meta, which will also be down. Yep. Meta down 5%. Jeez Louise. And then you have TTD, which will be down for no reason because it's an amazing company. And this one's probably going to be an easy long tomorrow, depending on how far down we open. Other than that, guys, it's a very tricky spot for the market. Like I said, I explained to you, I'm more 60% bullish right now, 40% bearish. I do not have any put swings on. I have a small TQQ call on. I will not trade. If it's not clear to me, I will not trade. The amount of money I'm putting into these put swings, I'm not comfortable putting in unless I'm sure of the play, like at least 80-90% sure. And that's when I'll put my money to work, when something clears up. But for right now, as I said, we are above the 200-day weekly moving average on ES. Why is this one? There's going to be a lot of lines. Be prepared. So here's the weekly. Let's go to the other one. This one, no lines. Okay, weekly right here, you have the 200-day moving average. As you guys see here, it's moving up around 3,600 now. 3,600 flat is the weekly. It's going to take some force to break below 3,600 on ES. That's all I know. You guys seen here, we based for like 4 weeks. And let's just do it now because I mentioned to you guys, go back and look. COVID, we broke below it and recovered it in 3 weeks. COVID, I don't even count as anything because it was just so fast and so stupid. Here's 2018 when they raised rates last time, bounced right off the 200. That was the exact bottom, and then we just ripped to new all-time highs. You guys see back here in 2016 during that big pullback right off the 200-day back to all-time highs. You guys see back here in 2011 was the last time they went underneath it, and they just kind of played with it before going on to all-time highs. This is a weekly chart, remember guys. There's a lot of time between these candles. It looks easy looking back on it, but the last time it broke completely was 2008, and look what happened to the market. It absolutely collapsed. I do think we will break that 200-day weekly, but it's going to take some time. Just like it did in 2008, just like it did in every recession, guys. It doesn't just go down and break it right away. As you guys see here, bounced it. This is about 3 months of time. So it's first tested the 200-day weekly in Jan of 2008. It even broke through it for 2 weeks in March, and then we went on a huge rally, and then when we finally rolled over was May. So first test in Jan, finally rolled over the 200-day was in June. That's 6 months later. That's how strong that support is. And right now we're just touching it now. So it's a very tricky spot in the markets. Again, guys, this is a marathon, not a sprint. We're not trying to make all our money overnight. When it gets clear, we'll trade. When it's not clear, I'd rather protect my gains. Other than that, have a good night, guys. Thank you, guys.